Good evening, everybody. It is about 7:20 on October the 11th. What a day in the market. Sometimes there are just no words, and let's talk about it. I'm your wealth guy. Let's talk money. Let's talk market wrap-up. All right, everybody. So let's just jump right into the markets because today we witnessed something shy of a miracle. You see, amidst all the negative numbers here, remember CPI coming in hot once again suggesting that we're probably going to have to see another rate increase because, that really fights inflation, even though it's been fighting inflation all this time and we've seen, quite frankly, nothing. We had PPI that was hot yesterday. Jobless numbers were a complete miss today, both initial and continuing. Economic news continues to be extremely negative. Markets opened this morning and tanked right off the bat, dropping as much as 550, maybe even a little bit more at the peak of the downside, before something incredible happened. You see, the markets turned around and ran to the upside. We saw the 10-year yield absolutely plummet from its high. And keep in mind, the range was quite significant. It reached over I think it hit 4.08 at one point, finishing now around 3.9, I want to say 4, somewhere in that range. Let me pull that up here really quickly so we have a better idea. 3.954 is where it is right now as of this recording. The US dollar, same thing. Any indicator that suggested that the market was going to go to the downside completely reversed. And the markets ran from down approximately 550, maybe a little bit more, like I said, and finished at the end of the day up 827 points for the Dow. And that's roughly 100 points off its intraday high. We have the S&P finishing at nearly 100 points in the green. NASDAQ finishing at 232. What an incredible turnaround that started roughly late morning and just carried on throughout the day. And you can see it. As markets started to go up, they'd pull back 100, 150 points and then just push up 200. An incredible move to the upside. Now, if there wasn't a clearer image of the Fed and central banks doing their job here to move the market and keep it from tanking, I don't know if they can illustrate it in any clearer fashion. I don't know what you might be thinking if you really do not believe that central banks are heavily influencing this market, preventing what has the potential to be a very, very, very steep fall. Because it doesn't make sense. I mean, think about it. Just looking at it from your perspective, not from mine, not from anybody else's, from yours. Lots of negative news everywhere you look, but somehow the markets turn around and probably had a record-breaking flip over from the deep negative to the deep positive. But somehow inflation was hot. We know interest rates are coming, and I don't want to hear. I know there's a lot of people out there that are going to tell me, Ron, it's already been priced in. Yeah, perhaps some of it may have been priced in. After all, we know that interest rates are going to go up. We know that inflation is going to be hot. At least you and I do. So yeah, I'm sure some of it was probably priced in. But you're not going to find buyers at this level and with this amount of money moving into the market. This isn't average Joe. This isn't institutions. These aren't big advisors. These aren't hedge funds or pension plans. Oh, no. This is bigger. These are central banks. These are central banks. Now, here's the funny thing, is that central banks are also warning us. Major political figures are warning us. Major banking executives are warning us. We have a liquidity crisis. We have a cash crisis. But the markets are okay, supposedly. The debt market is in trouble. I believe Janet Yellen spoke about that today, saying that everything's okay, but the debt market is concerning. You think? Is that why all these measures have been deployed, even though they're not public? Like, if you don't think that the Federal Reserve has a trading desk, I don't know what to tell you. They do. If you don't think central banks are actively acting here, I would love to hear what you think could be the actual movement here, or triggering at least this positive move, this support, this buoy for the market. Because as far as I can see, it seems very much like interference by the central banks. But comment down below. I'd love to hear what you have to think and have to say. Please subscribe, like. That's it for tonight. It's going to be a very short one. But again, I really want to know what you have to say. I'm looking for answers here because these are the answers that I have. This is what everything is pointing to. But if you're seeing something that I'm not, comment down below. All right, everybody. I'll see you tomorrow morning at the opening bell.